Hello and welcome to Livewise Buy, Hold, Sell. I'm Anna Dadic. In this episode, we will put the magnifying glass over 3 ASX companies in the small and mid-cap space with big growth potential. I've also asked our guests to each share one of their own picks. I'm joined by Will Granger from Airlie Funds Management and Marc Whittaker from IML. So first up, we're going to go right into it. We're talking about Life 360, the family safety and location sharing business, which has really captured the market's attention. Marc, I will come to you first. Is it a buy, hold or sell?
It's a sell for me, Anna. I know it's a very well-regarded stock, and I think the economics around the business model tend to be quite good and make a lot of sense, but you're paying 60 times and the expectations for growth for that business are quite high. So a hiccup here or there can see that rating derate quite quickly. So for me, it's a sell at these levels.
Well, this one rose to market darling status in 2024. It's pulled back a touch since then. How about you? Is it a buy, hold or sell?
Yeah, it's a sell for us. I think it's really impressive what they've built in terms of presence in the US and internationally. But and I think there probably are some sort of network effects that support the model, but it is still a pretty unproven business model. You know, the business doesn't make profit on a statutory basis, despite pulling the pricing lever reasonably hard. And I think to get comfort with the valuation, you really have to have a view on long-term margins for the business, and we can't get much comfort there.
Okay, double sell. Let's shift focus now to ReadyTech, a provider of mission-critical SaaS for education, employment services, workforce management, government and justice sectors. Will, staying with you, is it a buy, hold or sell?
Yeah, it's a hold for us. We do typically like businesses that sell this type of software, very sticky, low customer churn. But for us, you know, the balance sheet is a little bit stretched and it's been a pretty acquisitive business. I think you're getting a lot of compensation for that in the valuation, but it's still just a hold for us.
Okay, Marc?
Definitely a buy for us, Anna. Okay. So yes, it's enterprise SaaS effectively. Earnings and revenue are essentially 90% recurring, so very high recurring revenues. Founder-led business, Marc, the CEO, has found that business and led it basically from day one. So I think he's done a pretty good job. The hiccup for the stock in the more recent history of the stock has been just that growth rate in terms of revenue, not quite at that 10 to 15% compound rate that they've been targeting. It's been a little bit shy of that. We think that improves and the company does get back to that 10 to 15% run rate as customers, particularly in the local government space, begin to recontract and put budgets to work. We've had volatility and uncertainty. We think businesses and government departments are poised to start spending again, and ReadyTech will certainly benefit from that. The company's only trading on 10 or 11 times earnings next year. So for 10 to 15% top line growth, good gross margins, high recurring revenue, I think that's quite a steal actually.
Number 3, we're going to be discussing Breville Group. Marc, you're up first. Is it a buy, hold or sell?
I've got a sell on it, Anna, purely on valuation grounds. It's a good business, good products. I question the moat around the business. The company every year is going to spend a big proportion of its generated cash flows back into new product development, new ideas. You've got competitors emerging which are nibbling away in the food prep space and in the coffee space, whether that's Shark Ninja in the US and other players globally. So I'm cognizant that the stock is really well priced at around 30 times for ongoing long duration success, and I just question the ability of the company to sustain that performance in the light of what are emerging threats in many of its key markets and geographies.
Okay, a sell from Marc. Will, how about you? Buy, hold or sell?
Yeah, we think it's a hold. We agree it is a bit expensive, but we also think it is a very high quality business. I think they do have a lot of brand strength, and whilst there is competition, they've got a history of a lot of very strong product innovation. It's a hold for us on valuation grounds. I think you can get better exposure to the business through Premier Investments, which owns 25% of the company. We think if you apply reasonable valuations to Premier's other assets, you're getting a far cheaper entry point to Breville. So that'd be how we'd play out.
Okay, so I've asked the guys to also bring along a stock of their own choosing. So Will, I'm going to start with you. What's your pick? What do you believe has powerful earnings potential?
Yeah, the one that comes to mind is PWR Holdings. It's a stock that's had a pretty difficult year, with a sluggish revenue growth mixed with some margin compression and a big CapEx bill as well. But I think that's what presents the opportunity. I think the long-term sort of investment thesis is still intact. They're a supplier of the highest quality radiators and cooling systems in motorsports. They supply all of the Formula One teams. And we think there's a massive opportunity to leverage that existing IP into non-motorsports adjacents like aerospace and defence. And they've made some really good inroads doing that. So we think that's a buy.
All right, Marc, what have you got for us? What's your pick?
I've gone with a good old-fashioned Tabcorp. Now, we really like Tabcorp for two reasons. Firstly, when you think about the business, what is it? It's a set of wagering assets. So it's a retail wagering business, it's a digital wagering business, it's a media wagering business. And if you look at the history of Tabcorp over the last 10 years or so, it's never quite got the recipe right in terms of how to bring all these assets to market. So it's really about how does Tabcorp position itself as an omni-channel provider within wagering, and that's been the real challenge. What we really like about the business at the moment is that they've appointed Gil McLaughlin. He's been there for 9 months. He's the new CEO, previously head of the AFL, and he's really brought a broom of change through that business in terms of culture, accountability, performance, and just the way they think about the assets. They had a trading update just today, which was quite pleasing in terms of the changes that they're seeing and the benefits coming on the back of that. Wagering is a very resilient category. So if you're worried about the economy and volatility and so on, Aussies still like to punt. They're still going to go and put a couple of bucks on the footy side or the ponies and so on. So we really like the space. We like the change in management and we like the change in strategy. We think it's really poised to do well.
Okay, thank you, gents, for bringing your stock picks. That's all we've got time for today. If you enjoyed that episode of Buy, Hold, Sell, make sure to give it a like and don't forget to subscribe to our YouTube channel where we drop new content every week.